Hey yo, what is going on, viewers of the tube? My name is Tyler and I'm the host of the only channel that can interrupt your day, stop you dead in your tracks of what you're doing, and then you follow right along. You know our ringtone. It's time for Chico Crypto. Well, not much has changed since yesterday's video regarding the price as of shooting this video. Remember, I shoot these videos 24 hours in advance. Pulling out the Bitcoin price chart since the low in December, the chart still looks extremely bullish. Higher highs, lower lows, and since yesterday, we were hanging on 8.7K resistance. If Bitcoin does a similar thing as what happened on January 7th through the 8th and goes sideways and then begins its new leg up today, we are bullish and most likely 10K is coming. But if Bitcoin falls down to the sideways support level of 8.3K and hangs on there, still bullish, but 10K may be further down the road. If it broke through 8.3K support and sees a lower low, then it's bearish and 10K is much further down the road. But the next laid up is made up of a few highly important levels. Right now, this 8.5K to 9.2K range, we will see a good amount of fighting going on between the bears and the bulls. Why? Well, in October and September, we totally skipped these levels with the dump and then pump then. As we can see though, after that manipulation, the price hung in this level for 19 days, from late October till November 17th, and then dump. So I'd expect a similar thing to happen on the way up, just like what happened on the way down. The next highly important level after this, 10K, which was the price we were at before the first major jump in late September, aka the back dump. So where is it going to go? Well, what was this pump built off of? It's not that hard to see. Just going to CoinMarketCap and looking at the volumes. Of course, Bitcoin has billions upon billions of volume, over 44 billion to be exact. But looky below, USDT outdoing Bitcoin with over 53 billion. So let's just look into Bitcoin and see what is going on. How much of that Bitcoin 44 billion is actual spot USD trading volume? Well, going to Bitcoin's adjusted volume and then sorting by USD, we can get the exchanges. First is this Coinsbit exchange with over 2.7 billion in volume USD yesterday. Then P2P B2B, X-Rates, Fulgari, and finally one I have heard of, Coinbase Pro. So out of all the USD exchanges combined, it's just over 4.2 billion USD, meaning out of Bitcoin's 44 billion in volume, only 4.2 billion of it was actual fiat, or about 10% of the total volume, while the rest is pretty much Tether. But is that USD actually real? Well, remember that Coinsbit exchange. It had 2.7 billion or over 50% of the USD volume. What is Coinsbit? Well, the exchange only came out last year, and it already has major scam accusations against it. Bitcoin Talk thread, beware of P2P, B2B, and in the thread they explain how can this exchange have higher volume than an exchange like Binance, yet their Alexa website rankings are well below Binance's, not even close. The thread has many examples of how this hustle is pulled off. And this isn't the only thread. Coinsbit.io, scam exchange plus Ponzi scheme. Yep, they have a BitConnect-like pyramid scheme going on as well, called InvestBox. Well, guess what? P2B, B2B, and Coinsbit isn't the only exchange Valerie owns. An angry Buterin on Twitter posted this. He asked, what is the common thing between these exchanges? Coinsbit, X-Rates, Direbit, P2B, B2B, LiquidXBit, Bitcoin X Market, Whitebit, and Net Currency Index. They are all forks of the old Via BTC exchange server, which anyone can clone and copy off of GitHub, which was forked by Valerie and his team. All you need to do is look at the About Us page of some of the websites. Serial scammers are lazy and always use the same text. From the Coinsbit website, high performance. The main distinguishing feature of Coinsbit is the processing speed of up to 10,000 trades every second and 1 million TCP connections. How about P2B, B2B? Exact same words. How about X-Rates? Exact same words. How about Direbit? Exact same words. Now let's just go back to CoinMarketCap's USD volume. We know Coinsbit and P2P B2B are owned by Valerie, but we just found out X-Rates is too. The top 3 USD volume exchanges are fake. That is over 3.7 billion of the just over 4.2 billion. But we also found out from Angry Bear, he also owns Whitebit, which has 131 million. Valerie owns 4 of the top 6 USD volume exchanges. All I have to say is yikes, and why does CoinMarketCap include this garbage when it's a known scam? It's so unfortunate the leading crypto data aggregator is playing into the manipulation, but it's a common thing throughout the industry. Manipulate, and almost every exchange is complacent in their own form. What do I mean? Well, things have gotten extremely out of whack since the 2017 bubble. We'll look at Bitcoin, the 3 times it has been priced in the $14,000 range. First, in early December 2017, volume was about 13 billion then, and Tether was all the way down at rank 32, with only 825 million of them issued. Volume of Tether then, just over 1.3 billion. Total Tether volume was pretty much 7.5% of Bitcoin's volume. After this, we hit 20K in late December 2017 and deflated back down. A month later, we were back at 14K. Bitcoin's volume then, 18 billion, and Tether grew by 600 million to a $1.4 billion market cap. But its volume had tripled to 3.1 billion. Now Tether made up 17% of Bitcoin's total volume. The next time we hit 14K, 1.5 years later, in late June of 2019. Bitcoin's volume over 44 billion, but now Tether had moved up in the rankings to number 9 and grew from a 1.4 billion market cap to over 3.5 billion. How about volume? 37 billion, which means now Tether made up 84% of Bitcoin's total volume. And like I showed earlier today, the volume flipping has happened, and Tether now has 53 billion in volume, while Bitcoin only has 44 billion. The markets are obviously out of whack, which is more obviously from the money flow into Bitcoin over the past 24 hours. Tether is dominating over any fiat currencies. Which I know BSV supporters are going to be like, BSV doesn't need Tether. We got delisted from the Tether washing machine Binance. Well, let's just see what BSV's money flow looks like. Exactly the same as Bitcoin's, actually worse when compared side by side. Tether making up most of the volume, and when compared to Bitcoin craps, pretty much identical. So shut the freak up, BSV trolls. Now for a sponsored segment of this video, being supported by Energi, the crypto project that has taken a different route than most, and that is paying off big time. Like always, the details of our agreement can be found in the description. I said different route. What do I mean? Well, one of the most critical pieces of Energi that sets us apart is its fully transparent treasury fund. Throughout the end of 2019, September, October, November, and December, the Energi treasury outdid other projects' treasury funds by a large margin, even over 2xing dashes each and every month. The Energi treasury is used to fund the development of the protocol, exchange listings, and marketing of the project. And having that war chest has led to Energi's recent success. Also, I said it was transparent. Yes, all the activity of the treasury is logged on the histories page. The business area the money was spent, the number of contributors, as well as a breakdown of how the funds were spent, including amounts. And the activities of this treasury, they can be voted on by the community through their voting portal. The budgets for each month get voted on and approved by the large community of token holders, not the other way around where the power is held by a select few. Now, I have a full video breakdown of the Energi platform, diving deeper into the treasury, their masternodes, proof of stake protocol, and more. That video is included in the description if you want to check it out. So today, I just want to update you on what has just happened and the future of Energi in the form of Generation 3. So first, what just happened? Well, the Energi Earndrop has been completed, and it was one of the biggest airdrops in crypto history. Through 4 airdrop rounds, some 3.8 million Energi was distributed, valued at nearly $6.8 million. Just looking at the price of Energi right now, $1.68, meaning if you signed up and received the drop of 100 Energi, you got a free $168. And looking at Energy's peak price in late June of nearly $10, that 100 Energi was $1,000. A very generous Earndrop that gained many faithful community members. 45,000 people participated, and for an airdrop of this size, it took countless hours of auditing, appeals, and finding out who the bad actors were, trying to scam, while only true supporters received actual tokens. All this takes real humans, and it's amazing they pulled off such a successful drop of this size. These rounds of Earndrops put Energi in a solid position for 2020. They have a faithful community who has a war chest of treasury funds at their disposal, which means development of Energi will kick into full gear. The future of Energi in 2020, Energi 3.0. So Energi is already a proof-of-stake blockchain with masternodes and its own governance and treasury systems. With Energi 3.0, all of Ethereum's smart contract capabilities will be implemented into Energi's own blockchain. You can think of it as combining the features that set Energi apart with the robustness and years of Ethereum smart contract development. Instead of trying to reinvent the smart contract wheel, like many projects are doing, ADA, they are using what's already built, which in my opinion is the way to go. And by the way, Generation 3 of Energi is and has been out for public testing, aka testnet, since September, which usually means a mainnet drop is just around the corner. Now the final thing I would like to talk about today is Ethereum capabilities and smart contracts. And this one is a big one, as Gavin Andresen, core Bitcoin code maintainer for years, who had direct communication with Satoshi, might just be pivoting from Bitcoin to Ethereum. I showed this tweet earlier, but Gavin started out the year saying the biggest developments of the past few years belong to Ethereum, and that is because of the smart contract capabilities allowing things like CryptoKitties and pool-together's no-loss lottery. Well, just a couple days ago, Gavin made a public statement on his own personal blog about a smart contract running on Ethereum, Tornado, which uses ZK snarks to provide non-custodial, anonymous transactions. So the Ethereum, or tokens deposited into the contract, can't be linked to those that are withdrawn. And Gavin, he is highly impressed with it. But is Tornado what he should be looking at? Transactional privacy development on Ethereum is something special to see. Just 7 months ago, in late May, Vitalik Buterin made a call to action for the community, which was highlighted by CoinDesk. It came in the form of a HackMD post saying we need the first step toward more privacy, and he gave his thoughts on how it could be done. Well, Tornado was one of the teams who ran with it, creating the tool, a simple smart contract. But there are others out there that might be better, and even Gavin highlighted some of the problems with Tornado in the post. But I won't be surprised if there is a paper at the Financial Cryptography 2023 conference showing that 85% of Tornado usage was not private. Not because the cryptography is broken, because it is really hard for mere mortals to use something like Tornado in a way that doesn't leak information about their wallet, aka usability. Well, Gavin, something is getting built which helps alleviate some of your worries, and it comes from an Ethereum privacy solution, which is one of my top picks, Enigma. Enigma has developed the Salad Mixer, which uses Enigma's data privacy and randomness generation to be a better solution for privacy than Tornado. And it comes down to usability and cost. From Enigma's blog post about their mixer, other solutions we've analyzed, such as Micromix, a semaphore implementation, currently ask users to leave a browser window open while the deal executes. Your internet browser open for hours upon end? Not that private unless you know downright dirty operational security. Then they show the benefits over Tornado. Tornado.cash, another Ethereum mixer, requires users to securely store a secret note, which they will be required to submit when they wish to withdraw their funds. ZK proof-based solutions will always require a withdrawal transaction, while Enigma Mixer transactions can be set in motion without requiring a second withdrawal transaction from the user. And that is exactly why I got on Gavin's Twitter and said, hey buddy, check out Salad Mixer from Enigma. Hopefully he doesn't take it as I want to toss his salad. Cheers, I'll see you next time.